All right, good morning, ladies and gentlemen, and I hope you are all doing well. Welcome to today's call. Sorry. Welcome to today's call. My name is Julius, and we are going to be looking at moving averages. We're going to be looking at moving averages, and that's where we're going to base our sharing for today. So in the next 2 minutes, I'll be starting off. Next 2 minutes, I'll be starting off. All right, let's get started on our topic for today, the moving averages. And we are today, I'm not hosting this meeting alone. So if you hear some background, please bear with it. Hosting this meeting with Brianna here. She woke up very early. So and she's already in my office. So now we shall be working together with her. Please, if you get some feedback, bear with me for now. All right, so let's get into the topic. Basically, the topic is moving averages. So what are moving averages, and how do we use moving averages to have a better trading experience? Okay, so moving averages are basically statistical calculations used to analyze data points by creating series of averages of different subsets of full data. We have a couple of two types of moving averages, and these moving averages are often used on price trends, okay, for a specific period to provide a clearer picture of the overall trend. And these moving averages are used in technical analysis and to find better trades we could pick. Certainly, moving averages come in two main types. We have what we call the simple moving averages, which we call the SMA, and we have the exponential moving averages, which we call the EMA. All right. So simple moving averages This is the most straightforward form of moving averages. It is calculated by adding up a set of data points over a specified period. Sorry. And then dividing the sum of the number of the points. So basically, we have what we call the simple moving averages, and we also have what we call the exponential moving averages. Now, unlike the exponential moving averages, unlike the simple moving averages, sorry, the exponential moving average gives more weight of recent data points, making it more responsive to changes. Okay. So when someone is asked what is the best, usually the all can be used, but the exponential moving averages are more better because for them they give what is happening in the present. Okay, in the present and in the past. Okay. All right. So moving averages are widely used in technical analysis to identify trends, reversals, potential buys, and potential sells. Short-term moving averages react quickly to the price changes, but might be more volatile, while longer moving averages often a smoother trend and respond to more slower to the recent price movements. Traders often use a combination of moving averages to get a comprehensive view of the market. Sleep, baby. Sleep, okay? All right. Okay. So let's get into these so that we can have a better perspective or a better perspective about these two and how we really could be able to use them. So the main difference between the simple moving averages and the exponential moving averages lie on how they are calculated. Okay. But I don't want to go into calculation. I might cause confusion. Usually, let me share my screen. I may not be able to make life more complicated, so I'll find a better way. I'll find a better way to handle the situation. So let me share my screen and let's start off with these moving averages. Okay. Just a minute, guys. Let me get this. Sleep, okay. Deal. Bye. Just a minute. All right, so let me start from the exponential moving averages. If you can hear me, give me one in the chat. I was successful to disappear from the baby, so let's get this done now. Okay. Now, we are talking about two moving averages. We are talking about what we call the exponential moving averages, and we have what we call these basically provide they provide both past and present data. Okay, the past and the present data of the market. While you find that the simple moving averages, they usually mainly provide what we call the current data. So if someone is asked which of the two is better, me personally, I love the exponential moving averages because it works both past and present data. So it gives one of the best experiences of trading. Okay. And like we said that these are just calculated data. It's just calculated data. Someone may decide to use exponential moving averages or simple moving averages. Exponential moving averages or simple moving averages, just using what we call past data. Someone may decide to use look at a 10 days. Someone may decide to look at 20 days. Someone may decide to look at 30 days. All right. So all these different time frames, all right? All these time frames, ladies and gentlemen, that we have, we could use them to find a possible entry in the market. A possible entry in the market. Okay. Now, I want to go very specific now through these moving averages to try to provide a better picture, or try to provide a better picture. And create a better understanding. So let me share now my screen and let's get into these moving averages. Why are people complaining? What is the problem? Why are people complaining? It's me who's training. For you, your role is to listen and to see. If you don't see, then you must be listening. Okay? If you don't see, then you must be listening before you complain. I believe there should be that small ability to be patient. Okay, so let's get into these moving averages. So we have two types. We have the exponential moving averages, and we have basically we have the moving averages. But I'll just start from the exponential moving average and explain what they mean, what they do, so that I create a clear picture. So I'll basically get off my indicators from this, and okay. So I'll use this coin for the learning purposes. Okay, now we have, so I'll tap on plus FX indicators, and then I go to technical and I'll put exponential, moving average exponential. Okay, the exponential moving average. The moving average exponential doesn't matter, or the exponential moving average. Whoever gives you, you are good to go. Okay. Now, okay, now this one has the approach there is not right. So we shall just write in the moving averages. The moving averages. the exponential moving averages. The exponential moving averages. Okay. No. This guy is using a McKinney strategy where I don't like now. His approach is not what I like. Okay, let's go back. Okay, so we shall be using the moving averages exponential. Beautiful. Now, when you tap on the moving average exponential and you open it, this is the line. When you tap on it here, you will see that this one is a 9 moving average. So the method is in here. You could make it a simple moving averages. This will not focus so much on the past data, or you could make it an exponential moving average. This is a 9 exponential moving average. It means that it focuses its data on the 9 previous candles. So I'll change this to a 200 moving average. 200 exponential moving average. And I get it done. Now, this is a major moving average in trading. So many traders across the world, if they want to confirm an uptrend, they use what we call the exponential, the 200 exponential moving average. Why? Because this moving average looks at past and present data. Okay, this moving average looks at past and present data. So let me make it a little bit better. I'll just increase the thickness. Let me see, but I'll just, so this moving average, you could decide to switch on the smooth line that moves alongside with it, or you could leave it as it is. But I want to express its main point here. When you see an exponential moving average, let me try to go to main cryptocurrencies like BTC. So that the exponential moving average will make a lot of sense. And let me use a bigger time frame one day to create a better understanding. Okay. Because unless someone could be able to see this, someone may not be able to understand what we are talking about. Okay. Let's get a clear crystal picture of the 200 moving averages. You must be able to understand 200 is a number. It means it is focusing on the past 200 candles. Okay? The past 200 candles. So basically, you can see here, when BTC, let me get back here so that I create a sensible understanding. In 2021, I don't know if all of us can see here. Let me remove the drawings so that remove all drawings. Okay. In 2021, ladies and gentlemen, let me start from up here. In 2021, we saw Bitcoin make what we call an uptrend. Okay, so let me just get a little bit down below here to give a proper understanding. In September 2020, we saw a crossover. I want people to see this, so I will take screenshots so that I could notate around. In 2020, candles were moving below here, the 200 moving average. And then they crossed above and started forming above. So the first point I want to express this morning, you will find that when candles form above, the moving average is acting as one, either a support or either a resistance, depending where it is formed. Now, in this area, it is acting as a support area. Candles touch it and move in the opposite direction. So here it means that the 200 moving average is acting as a support. That's point one I want to express. Now, let's get it clear. In 2020, we could see that candles were forming above the 200 moving average. And this was a confirmation after a crossover and a test candle above it in the one-day time frame. I don't know if we can see this. You can perfectly see that this candle crossed, then we had a test candle here. This was around May in 2020, and that was the start of what we call the bull run that was going to go to a main run in 2021. Okay, so when you see that candles, because before, when we got back down here in March, I want this candle. On 13th of March, ladies and gentlemen, you could see the downward trend of those years. Bitcoin went up to as low as $3,800. Then we saw that the candles were forming below the 200 moving average, the 200 exponential moving average here. You see, candles were forming below. But then we started to see an uptrend that caused the candles to cross and start forming above the 200 moving average. And when they crossed and started forming above the 200 moving average, it got a test candle. And that was the end of the downward trend of 2020. Okay, I don't know if I need to be specific, yes. Now, the market started moving in the opposite direction, and we can see candles started to form above. Candles started to form above. I want you to see all this until we see this. This was around $64,000 to $65,000. And then later, we saw candles come and break the 200 moving average, and they started to form below the 200 moving average. Later, ladies and gentlemen, we see a crossover again. Remember, when we are talking about the bull run, we usually give it close to 3 specific years. You can see that later it crossed again here, and we saw the all-time high of BTC again when it went close to 69, close to $70,000, which didn't happen. So which means that BTC moved up to around this level, up to around that level, $69,000. $69,000. Then later, we saw a break. So the Bitcoin moved down and it broke the 200 moving average, ladies and gentlemen. It broke the 200 moving average. I want you to see very clearly. It broke the 200 moving average. And you can see these points here. Now it was acting as a resistance, and things did not work out until recently in 2023, where we see that candles have lately crossed the 200 moving average. And they are now forming above the 200 moving average. I think you can see this area. This is October. The previous month we have finished, and we have seen BTC run up to as high as close to $38,000. Ladies and gentlemen, someone may use the 200 moving average to be able to trade. When candles cross above and have a test candle, someone could be confirming an uptrend. When candles are forming above the 200 moving average, ladies and gentlemen, we call this an uptrend. When candles are forming below the 200 moving average, we call this a downward trend. So a 200 moving average confirms whether this particular asset you are trading is on an uptrend or this particular asset you are trading is on a downward trend. So I'll just now go to Ethereum USDT pair. I know when I'm talking about this, I may not be able to exhaust everything. Okay, so but I want to speak the same language you will all understand. In the previous cycle of the Ethereum, we saw that in 2021, I will just pick, it should be a close, this is 2022. In 2021, ladies and gentlemen, candles closed, this is 20, you see this was 2020, this was 2020. We see Ethereum forming its first all-time high after candles forming above a 200 moving average. That was around 4,000. Then we see it forming one of its highest all-time high around there. Then we see candles becoming below a 200 moving average. And recently we have seen a major crossover, and Ethereum is now done with the downward movement, ladies and gentlemen, now trying to form an upward trend at a $2,000 cost. But we have seen a downward trend where Ethereum has gone up to over close to $1,000. And now we see Ethereum has doubled its prices after it has now formed above a 200 moving average. So, Julius, can I use a 200 moving average only to confirm entry of this trade? No. No, ladies and gentlemen, you cannot use only a 200 moving average to confirm your entry in the market. But, like I say, it's usually a couple of so many other indicators that confirm your entry in the market. But a 200 moving average, because it looks at so many candles, whenever candles are forming above it, it confirms that this coin is on an uptrend. I could show you one of the previous coins that have done well. Let me just find a few of them. I've seen USDT, this coin. Okay. I hope you see, guys, immediately after the crossover happened here in the 1 day, this coin here, after this test candle, this coin from here, it was able to deliver over close to 34%. Okay, so it's usually a major cross when you see this happen. Now, we can use what we call, now the challenge here is that we can't have more than 2 indicators on the screen, but let us add on another exponential moving average. Another moving average exponential. And this time around, ladies and gentlemen, this is a combination of, this could be a 9 or anything, but let me just raise it up a little bit to around a 50 moving average. Or I could use a 50 or 100, it's okay. So I will take 50. These are just numbers. So I want to look at 50 candles. Okay. This is a 50 moving average. If I could use a 9 or a 10 or a 15, you'd find that the crossover would have happened long time. So I want to use a little bit strong, so let me change this to orange and give it so that I could see. Now let me take these same statistics to BTC. Then I'll take you to RoyalQ specifically. Okay. Now, when do we always confirm an uptrend of a given cryptocurrency? We have what we call a golden cross, and we have what we call a death cross when it comes to using moving averages or exponential moving averages. You find that, ladies and gentlemen, when a small moving average, like all of you could see in this scenario, when a small moving average, which is a 50 moving average, has crossed a 200 moving average, this cross here is called a golden cross. Why is it a golden cross? It's because that this confirms that this coin is on an uptrend. So at the crossover, if candles are forming above and at the crossover, you see that then just know that this particular asset you are trading is on an uptrend. So we see that in 2023, as we speak now, we have seen what we call a golden cross, where a 50 moving average once again crossed a 200 moving average. And because of that, we have seen in the one-day time frame, when the crossover happened at around this place, ladies and gentlemen, or someone could take this, we have seen a Bitcoin move from as low as $27,000, okay, as low as $27,000 to as high as close to $38,000. So from here where the crossover happened, this was October 2023, we can see the market rise and delivered more than 40%, ladies and gentlemen, from the marketplace. Why? Because of the golden cross. So if you are trading a certain cryptocurrency, let me say XRP, or let me say Wild, and you see the crossover, hope you can see the crossover here in the one day on the XRP coin. When the crossover happened, this was confirming an uptrend of XRP, and we can see that from this point here on the crossover that happened in October 2023, we have seen XRP deliver close to 44% in profit. A very amazing combination when dealing with let me make it exponential so that I could get the better results. Okay, still the same results, but I wanted to get more data. So using and combining these two, really, when candles are forming above it, just know it is acting as a support. And when you see the golden cross, then expect the market to be going to do a better business for you. So many cryptocurrencies have made crossovers, and from there up to now, people have been making money when they see the crossovers of this. Someone may ask, when did the crossover last happen? I'll pick Bitcoin as an example of this combination. I'll pick BTC USDT and then take you, I'm using 50 and 200. When did we see? Let me use the one-day time frame. Okay, when did we see the last crossover? I'm using a 50 moving averages. These are just numbers. Someone may decide to change this and say, I want to look at 100 candles. Past data of 100 candlestick chart patterns. And it will change. It's up to you what you want to use. Either you could use, now it means I'm using 100. So you will be able to see, but the most common one being used, you'll find people don't use this. You'll find people use so much a 50 moving average, a 20 moving average. I'm going to go to those later, but allow me use the 50 moving averages. This is just number. Because usually has a best combination. Here, I don't know. Am I still here? Can you hear me? Can you hear me? The challenge now is that I wanted to teach the rainbow, but I think I'll do the rainbow in RoyalQ because for you to do it here, you need to have paid for the Zoom. Sorry, if not for the Zoom, but for the moving average exponential, I want a 50 moving average. Okay, this is a 9. So I'll just turn this to 50. But I'm going to take you to RoyalQ because this is so good in RoyalQ and in Binance. Okay. I'll turn the color settings Style, turn this blue to orange, increase the thickness, good to go. Okay. Now, ladies and gentlemen, the major area is what we call a crossover, and it's called a golden cross. But we also have a death cross. What is that death cross? Like here, in 2021. Because these things are going to be repeating themselves in this year we are in 2021. All of you can see there was a crossover at that point, at this specific point. And this crossover, this one, made Bitcoin to go as low as $16,000. This one, it is called a death cross. When you see it, you see a small moving average crossing a big moving average like that. Or we could say big moving average crossing a small moving average. Understand that the market is not going to go in your favor. When you see it, just know you need to get out of that trade. Or else you will be enjoying the downward movement of that particular asset you are trading. All right. Now, having given you this impression, I want now to go to anybody who has a question. I said 1, they act as support and resistance. 2, they help to show you the trend of the market. 3, they could show you whether to make an entry in the market or to be patient with the market. Any question about that before I go to the rainbow in Royal Q and Binance? Any question about that? Any question? Please, you go and look at those coins by yourselves. People who are on my neck, please get on this coin. Please, you could go and look at those coins by yourself. All right. When do you close? No, I want to repeat the first time and the second time. Entry and exit of trades is done by support and resistance. Let me repeat that point. Entries and exit of coins is done by support and resistance. There is no entry price. The crossover helps to confirm for you that the coin is on an uptrend. It has made a golden cross. Candles are forming above the indicator. But entry and exit is support and resistance. But I don't know what happens with Massey. Whenever Massey joins, he asks, what is the name of the indicator? I don't know what happens. Every time Massey joins, Massey asks for the name of the indicator. I don't know why. Every day. Every day. Every day. Must it change those moving averages 20 to 50? No, we can use other parameters. For example, let me show you. It must not be 200. I just gave you the best. Let's get to this. One of the best, I think, when I was learning to, let me give you other combinations you could use. I think I'm sharing. Can anybody see my screen? Let me know if you can. Give me one in the chat if you can see my screen, so that I could go ahead. Okay. All right. Just a minute, guys. Now, when it comes to these moving averages, we have several combinations we could put in place. By the way, just a minute, guys. Okay, so let me share my All right, I'm back now. Sorry for that. Let's continue. Okay, so let's now move back. You know, even when someone sees you are off Zoom, someone can still complain. Someone has even called me here on the chat line. Why are you off? Why are you off? Come back. I don't say certain things I don't control. I cannot control the network issues. Okay. All right. Now, you could combine a 200 moving average with a 20 moving average. You tap on the settings on the input, you could turn this 200 into a 20 moving average. Or you could combine a 200 with a 50 moving average. So when you see a cross, when a small moving average crosses a big moving average, we call that a golden cross. And the same thing, when you see a big moving average crossing a small moving average, like in this scenario here, it is called a death cross. This means the market is going to be coming down or going down in that aspect. When you see something like this and candles are still forming above, then we call that a what? A golden cross. Now, we also have something on the moving average we use called, but before I get there, let me pass some few reminders. I have said that when candles are forming below a moving average, we understand that the moving average is acting as a resistance. When they are forming above, this example is here. Let me show you. When candles are forming above this, like you see this, this moving average is acting as support. When they are forming below, it is acting as a resistance. Also, I've said that when you see a golden cross, you plan your entry in the market. Entry, the indicator will just show you when to enter, but entries and exits are done by support and what? Support and resistance. Imagine you entered Bitcoin here at the crossover. Okay, you had seen support, because if you want to draw a support line, we could have drawn it here. All right. And if we could have drawn a resistance line, we could have drawn it here. Imagine you saw your support, then you added these two indicators, you saw a golden cross. You would just make your entry and plan your exit at the resistance. It was one of the highest. And Bitcoin would have given you 19%. Support and resistance. Support confirms your entry, resistance confirms your exit. Those who were asking me when you enter, when you exit, the indicator just confirms you to see the direction of the market. Okay, the direction of the market. Now, I want to teach about the rainbow. I want to teach about the rainbow, but I cannot be able to do it here. So I want to go to RoyalQ or Binance. Give me one in the chat if we are together. Give me one in the chat if we are together, up to there. I've said you could use a 20 moving average with a 200 moving average, a 50 moving average with a 200 moving average to help you confirm the direction of the market, to help you understand maybe support and resistance, to help you see a golden cross or a death cross on the coin you are trading. Someone is saying, look at K. I know most times when people give you coins, you know they are on floating loss on those cryptocurrencies. When you see someone insisting, look at this coin, you just know they're on floating loss. So they want you to give them confidence that they're going to make money. Wow, there was a nice golden cross here in the 1-day time frame on this coin called compounding, and we see from here it's delivered. By the way, it usually delivers 25%. Okay, let's go to the 4-hour time frame. Now, here in this scenario, there is support drawn. We see candles are forming, they were forming above, now they are forming below, but we see whether it has been supported or resisted. Okay, and we can see something. This is in 1 hour time frame. What is planning to happen here could either be this is planning to, the market was planning to make what we call a death cross in that area. Okay, and you see it happened in the 30 minutes time frame. But now what is happening, ladies and gentlemen, is that we see the candle is forming above. Can we see that in 30 minutes? The candle is forming above. So if you had drawn your support and resistance very well, you could now plan maybe to do this, to plan your exit, or you could now remove these indicators now that you have seen it is forming above a 20 moving average, and then add on subsequent other indicators like the FIB, like the stochastic RSI, because you cannot have more than two. And you see here on the stochastic, on the FIB levels that we learned, I'll turn this to right, values to percent, and press OK. Why is it not changing? Okay. In the 30 minute time frame, but you know me, I'm not that person who okay, beautiful. I hope you see from 0 to 38. Someone had seen this already. Someone has made some good profit, because we say you'll find a reversal at 3 and has taken a 3%. Indicators, but these we have discussed already, so I'm not repeat myself. Okay, so the inter confirms to you. Then tomorrow we shall look at the moving average, convergence, divergence indicator. Okay. Cake is, where is cake? Could someone give me an answer? Where do you see cake? If you were a trader, cake is in which area? Let me just get this. I don't know why they keep on changing. Let me get this done very fast so that I could provide a crystal clear question. 9, 10, 10, line. I'm not repeating this because we have done them before. So I'm just trying to draw. So I'm not repeating any of these for anybody. So me, I'm just trying to draw. Okay. Ladies and gentlemen, those that are seeing my screen, what do you see on cake? What do you see on cake? Let me get some answers in the chat. What do you see on cake? It is seated. The market moved from 100 to 0. It has touched the 61.8 area, and it's now trying to move in an upward trend. Although the stochastic RSI is pointing down in the 4-hour time frame, but it is close to the oversold area. Okay, what do you see in the 4-hour time frame? Anybody tell me in the chat, what do you see on cake in the 4-hour time frame? Some answers in the chat before I add on these other indicators. What do you see? What do you see? I need a general picture. Don't use stochastic. I need a general picture. What do you see? A general picture. What do you see on cake in the 4-hour time frame? In the what decision could you make in the 4-hour time frame on cake if you are the trader? What decision could you make? Let me see some answers in the chat. If you were a trader, thank you so much, Coach Manish. You would buy. It is into an area where you could invest your money. Okay. Now let's move. Yes, you make an immediate entry because cake has power to give you how much from current price. This is already, it could give you a 2% very fast. It could give you a 7%. If you are this person who can wait, it could give you a 10% from where it is, or a 5% from where it is. Very potentially possible. Then you set up your margin calls, minimum 10 to 5, you are good to go. Okay, now let me remove these now, because we are only accepted 2 indicators. And then I'll use the moving average exponential 1, moving average exponential 2. So I want 2 indicators in my screen. Moving average, okay. All right, then I'll come on the settings. Then I'll make one, let me say a 200 moving average. I'll make it exponential. The reason why I move away from smooth is that the exponential moving average doesn't give us the noise of the market. Then I'll turn this. I'll turn this. Let me give it a 20 moving average. And then, since they have the same color, the 20, I'll give it an orange, increase its thickness to that. Then the 200, I'll give it blue, and also make sure the thickness is also a little bit bolder. Okay, can we see that, guys? Can we see that Cake had already made a crossover in the 4-hour time frame? What name do we call this, ladies and gentlemen? What name do we give to this area here that was created by Cake? I need some answers in the chat. What name do we give this? What is the name, ladies and gentlemen, where a small moving average crossed a big moving average? What name do we give to that? Some answers in the chat. Some answers in the chat. Some answers in the chat is a golden cross. A golden cross. And you see, ladies and gentlemen, that after the golden cross, we have seen Cake basically are going to as high. Imagine you made your entry around those areas. You could see that Cake has been on an uptrend from here until it delivered 110%. From when to when? From the 24th of October to around the 6th of November. If less than a month, it delivered over 110%. Okay. Maybe I look at it in 1 hour time frame. Okay, maybe here you are waiting for candles to form above and plan your entry. But you see still, candles are still forming above a 200 moving average, which means this coin is still on an uptrend. So you can use other indicators to make entry in the market. Well, tomorrow, I'll now go into the rainbow strategy, the rainbow trading strategy that we have in our Royal Queue. Tomorrow, I will do the rainbow in our Royal Queue and also in Binance. What I mean by rainbow is a combination of 3 either simple moving averages or 3 exponential moving averages. They form what we call a rainbow, and I'll talk about the rainbow tomorrow in Binance and in Royal Queue to show you how you could use the same strategy to pick up trades in your Royal Queue application. Thank you so much, ladies and gentlemen. Indicators could help you just make decision in the market, but entry and exit in the market is determined by support and resistance. So if you can't draw support and resistance, you can't trade. You can't say, I'll use indicators to trade. You must be able to draw support and resistance. So God bless you. Thank you so much for today. See you tomorrow. And have a nice, fantastic morning.